In general, tariffs, they do take a while for it to negotiate. I mean, even the trade deals that we do have, details appear pretty scant on certain aspects, especially the sectoral tariffs. But when it comes to India, we tend to look at it more on a relative basis rather than the absolute basis. Yes, we are comparing 25% with the 15% that we've heard so far, Japan, EU, South Korea, for example. But there are still merits to investing in India. I think, about more than 40% of exports are services oriented as well. So I think what we're waiting for to see is, okay, so what happens on the pharmaceutical fronts? Because India is obviously one of the major exporters. Exactly. So sectoral tariffs will be one of the things we're looking out for. But a longer term story when it comes to investing in India remains pretty much intact. The structural demographic story is still pretty much intact. The policy continuity that we're seeing over there in terms of infrastructure, the revival of urban consumption, etc. I think that narrative is still pretty much intact. So it could take a while, but I think what we do know is that peak uncertainty around tariffs is over. I think that's the most important part when it comes to investing at this point in time.
Do you like the fact that the RBI has front-loaded the rate cuts, and do you like the fact that inflation within the Indian context remains pretty well anchored?
No, that's one of the key concerns when it comes to RBI, right? What happens on the CPI front? So obviously you do get the kind of flare in consumer prices because of the monsoon seasons and what happens to agricultural prices. But I think more broadly, RBI has done, alongside some of the other Asian central banks, cut rates preemptively, just waiting to see what sort of impact that tariffs would have on economic growth. But also fiscal policy remains quite important as well, right? Because we do think that it goes hand in hand. Fiscal policy really kind of providing that sort of offset to external headwinds. And I think it's not just confined to India, but the Asian economies in general, which tends to be a major exporter to developed markets, primarily to the US.
On balance then, Raisah, when you consider that the US has cobbled together trade deals with Japan, South Korea, Vietnam, Indonesia, can we afford to be a little bit more confident then about the broader economic outlook in this region, perhaps selectively? Or is it going to take time for all of this to culminate in material FDI inflows?
Yeah, I think for now, we're still struggling to figure out, okay, what would the direct impact on tariffs really be? Would it be on the corporate earnings side, on foreign exporters? Would it be on consumer prices on U.S. consumers? Right. So I think we're still trying to figure out the impact, and I think details now, again, we don't really know the full details of those trade deals for now. But I think the second half of the year, at least more on a global perspective, we are going to see a growth moderation. We did see that sort of front-loading activity. The AI spending is still keeping the Asian economy still at bay. Right. So there is still some of that long-term structural drivers that will at least keep some of the Asian economies, North Asians, some of the select Southeast Asian markets, at least to get that growth continuing, at least through the second half, or at least the first half of 2026 as well. But again, I do think that FDI, in terms of corporate sentiment levels, we've seen that major hit in April. They've seen rebounded back as well. We've seen it in Japan. But yeah, I think the worst is behind us. I think that's the most important, at least to us. That's the most important part.
Interesting. Raisah, Mandy has a question.
Mm-hmm. Yeah, sure. I'm just bouncing off Sri's question a moment ago with regards to the various trade deals around the region, Raisah, such as with, Japan now, of course, South Korea today, and also Vietnam, that have been cut. I mean, naturally, it removes uncertainty, which is already a positive for markets. But in terms of asset allocation, how does it change things for you?
So I think when it comes to asset allocation, if you have to build an equity portfolio, US will still remain that key core of that portfolio, just because I think going into this year, we had said that AI, the automation piece was really the drivers and underscoring the equity returns, at least in the medium longer term story. And I don't think tariffs necessarily has changed that at all. Now, what we're saying is that if your portfolios have been really concentrated in the US markets of late, then it is time to get some sort of rebalancing in that portfolio. And that really means reallocating and thinking closer to home here in Asia, whether it's Japan, because you do have that corporate governance story, that value up story in South Korea, and even within Southeast Asian markets, right, where valuations are a lot fairer in comparison to, say, the more developed markets in the US, for example. So we still think there are a lot of opportunities here closer to home, and that investors could really look at some of the longer term drivers, structural stories out here in Asia.